Hello, a warm welcome. I hope you can hear me okay, and it's lovely to be with you today at this opening session of Emerging Europe and the Asian Tigers looking towards 2030. A huge thank you to Andrew, Emiliano, and the whole Emerging team for bringing us together for this part of the Emerging Europe's Towards 2030 programs, which are promoting sustainable trade and investment relations. And I've got to say, that was a fascinating fireside chat with Jiwon Jung and Mary Dietel, really insightful. And I hope that our next session, in which we're going to be looking at, of course, ESG and its application in economic relations between the Asian Tigers and emerging Europe region, will be just as thrilling. So I'm very pleased that we are joined today by Agnieszka Gajewska from the PwC, Public Sector and Infrastructure Leader for Central and Eastern Europe at PwC. Jeffrey Liebert, the CEO of Gazelle Finance, Daewoo Lim, and actually it's going to be Jin Young Kim, the head of brand ESG group, KB Financial Group, and Professor Hyo Xiang Yu, which is, I hope all of my guests, I hope everybody can hear me. It's always really difficult when we're doing something across so many different platforms and so many continents and in fact time zones. So welcome to you all. I wonder, Professor, if we could start with you, in fact, because when we talk about these two parts of the world coming together, we heard about how the economic and the financial structures of Poland and the Asian Tiger economies were very much growing and developing. I wonder if you could just give us a historical insight into what brings these two different parts of the world together, and then we can open it out to the rest of our panel.
Hello.
네, 한국에서도
In Korea, recently, ESG is being discussed a lot these days. And in Korea, we have something slightly different from global standard ESG. We have some efforts of trying to have frameworks separately for E and S and G. It is for investors to reduce their risk and for them to have long-term investment. However, in Korea, it is not an investor-centered aspect. It is from the company's perspective. It is being used as a concept similar to CSR. And because of this, there is some confusion for the companies. And therefore, companies consider ESG similar to corporate responsibility. And therefore, there are some viewpoints from the companies viewing ESG from corporate social responsibility. That is why it is different from the investor's viewpoint. And in Korea, we have the chaebol system, which are large conglomerates in Korea. And for large conglomerates here in Korea, they have not resolved their governance issues. So in governance part, ESG, in the ESG governance is taking a big portion. And these large conglomerates are talking of ESG similar to CSR, and we have participants today from the financial sector. So for investors, we need to set to the right direction, and investors are trying to do so. But in Korea, we have some mix-up of the concepts of CSR and ESG and large conglomerates. They have created separate departments for ESG. They're trying to set up standards, and Europe is leading in this area. Therefore, in Korea, we're trying to learn from the system of Europe.
Okay, Professor, thank you so much. That was a fascinating insight. And Agnieszka, I want to bring you in on this. I hope you heard everything from the beginning, because I know that Jeffrey, you had sound problems, but you're back with us now, so that's great. But Agnieszka, when it comes to that kind of misunderstanding and that lack of that maybe slight confusion between what the purpose is, as the professor was outlining, it's much clearer in emerging European countries as to what ESG is all about, I'm assuming.
Hello, Kasia. Good morning, everyone, and thank you for inviting me here. I hope you can hear me. You're nodding, so I see that you can. That's great. Listen, I think as much as there might have been the confusion of what is ESG, what is CSR a couple of years ago, I think right now in some countries of emerging Europe, especially for those who are part of the European Union right now, this confusion is definitely gone. If we're looking at what is going on right now with the European Green Deal, with the huge changes around regulatory environment, especially last week after the Earth Day, when the European Commission put these regulations as part of the European law, I think we have like a very, very clear view of what is going to be expected. Especially in the 11 countries of the EU. But I would say we are already observing, and what the professor was referring to, a spillover effect. So actually what the European Commission is looking for right now, and is going to be the requirements for the European companies, is also having a spillover effect on the supply chain pretty much everywhere. Don't forget that, especially when we're talking about the greenhouse gas emission and reporting on this, some of you will remember that actually we're talking about 3 different scopes. So it's about what you are producing, but also very much in the so-called scope 3. We're talking about your pretty much entire supply chain. So it's not only what you can control, but also what is coming as part of your bigger ecosystem. That is why my thinking is, as much as we could have thought about some sort of a confusion, is it just about the glossy reports of how many plants have we planted last year? No, it's not the case. Right now we're talking about the real commitments and real reporting requirements that is coming our way, and it will have a very big impact on pretty much everything that we do.
So it sounds it's very concrete measures then. It's very specific, it's very targeted. Thank you, Agnieszka. Let's bring in Jin Young Kim. Now, you're head of brand ESG group for KB Financial Group. So I'm assuming there's no, in terms of your company, there's a very clear outline as to ESG. So talk us through how your company go about advising and encouraging other companies to follow the ESG line. And I wonder if like me, you were watching President Biden. I was broadcasting last night as he was giving his first address to Congress, and he was talking very much about job creation and green job creation. How important is that in terms of what you're advising and how you see companies going forward? Jin Young Kim.
I can say that KB Financial Holdings, first of all, our holdings company is the largest financial holdings company in Korea. And last year, we were the first financial institution in Korea to announce going carbon neutral and going post-carbon and decarbonization. And within the board of directors, which is the highest supreme decision-making authority, the board of directors agreed to form an ESG department, which answers directly to the board of directors. And so that decision-making process is done right there at the board of directors level. And so we've been very active in joining different related councils. There are about 30 million customers that we deal with. And we create green and eco-friendly products for many of our consumers and customers to use. In Korea, I have to say that the concept of ESG has not been completely rolled out yet. It is not being completely applied in different sectors. And as you know, as a banking institution, we try to allow for a good flow of capital to have help companies invest in different resources that they need to grow. But I don't think that we are quite there yet, because we don't really have what we call a K taxonomy. We don't have an actual classification system or a taxonomy system. And I think that is still a big challenge for us. And last year in 2020, together with UNEP FYI and the European Financial Association, we participated in the working group to come up with a European taxonomy. And did some research on developing these guidelines. And the reason we participated in this is because we wanted to learn more about the European taxonomy development process, because as we know, the EU is a leader in this sector. So we wanted to try to see how that can be applied in the Korean context. I know that around the world, there needs to be some shared understanding of some standards, I guess, especially with the fact that this is an emerging market. So with ESGs, we need to come up with some universal standards that can be accepted everywhere. So for example, if we were to develop some standards here in Korea that are too strict, for example, for investment done in Southeast Asia or some other countries that are still developing, that could be seen as too strict for them. It could be seen as too much of a hurdle. So for us to be too strict early on when it comes to the ESG process, we want to allow for a soft landing, to allow for wide universal adoption of ESG standards, and maybe provide some incentives and benefits to those players who are doing a very good job with ESG. So with these positive benefits, instead of going negative, some sort of a positive incentives to try to allow for more growth and developments with the emerging markets. And as for job creation, with green job creation specifically, at KB, we are looking at two things in particular. The first is to support startups and support social impact enterprises, new businesses that want to create some sort of social value, especially young entrepreneurs. We have created a separate startup center to provide consulting services and assistance to these young entrepreneurs, provide funding if necessary as well, to provide them with some sort of assistance for their success. And secondly, the other thing that we're doing is we have we also have an expo. KB organizes and hosts an expo, a job fair, if you will, that we've been doing for about 10 years. Every year, about 20,000 job seekers come and they successfully find gainful employment through this job expo. And so in the future, we want to expand our outreach to immigrant laborers seeking jobs, North Korean defectors who have escaped North Korea to come to Korea, or immigrants who've married into a Korean spouse, who've married a Korean spouse. When they find employment, then they could work together with us. And also we want to work with many of our partner companies who are especially very committed to ESG. We want to sort of liaison between these young job seekers and those companies.
That's a fascinating insight. Jin Young Kim, thank you so much. That's really interesting to hear. And I want to pick up on a couple of those aspects with Jeffrey Liebert, CEO, Gazelle Finance. Jin Young Kim mentioned this importance of everybody working out their priorities, their criteria in a similar way so that people aren't running ahead. And I guess also in light of the global shared experience of COVID, and I know a lot of your clients have had, as most companies and most individuals have had personal experiences of this devastating disease. But I wonder if you could just express the kind of the advice that you give, and also the importance for us to come together and have the same kind of criteria as Jin Young Kim was talking about when it comes to trying to bring people and bring different parts of the world together.
Great. Thanks, Cassia. So Gazelle Finance is a private equity fund manager that invests in the Eastern Partnership countries. So it's really the frontier market countries of Europe, on the edge, the former Soviet Union countries that are just right on the axis between Russia and Eastern Europe. And we're certainly sort of at the sort of spearhead of pushing the boundaries of bringing ESG practices to these companies, because when you're a 4,000 GDP per capita country, you're making trade-off decisions. When you're building out your working capital strategy, your investment strategy, are you going to take the same actions that you're going to take as required by an EU country? So those are trade-off decisions. But I can tell you that for Gazelle Finance, what we're able to do is turn sort of ESG into an opportunity. And in fact, I would say it's often an incentive, and it does filter out the great companies from the less great companies, the companies that want to have institutional capital, that want to improve their governance structures, that want to, have better approaches to labor practices and environment as well. And so then, if you look at us, most of our investment capital is what is often multilateral and bilateral capital. So we have in capital from Dutch investor FMO and in the United States DFC, formerly known as OPIC. And so they have standards, and there's no doubt that those standards are not always consistent across each other. And so what we have to do in those circumstances is take the most aggressive one and apply it to all, right? So, I wish that standards could be standardized. And I think this is always a dynamic that's been going on and often led by a lot of the multilateral institutions. But it's a constant game of trade-offs, and I've seen this happen in the clean tech industry before ESG became so big. And what is clean tech? How do you define it? And we're going through that as well with impact. So these what often happens with things like ESG is they get co-opted, and certain companies say they're doing ESG and they're doing it at a lesser standard than others, and you end up having it ends up taking the brand of ESG investing and actually diminishes it to some degree. And I don't know if there is ever going to be a mechanism that you can unify every country and every investment platform and investors and recipients of investment capital to take a completely standardized approach. But that is something that I think is an issue that has to be constantly focused on, because ESG to Blackstone is different than ESG to Gazelle Finance, and it will always be different, just given the scale of the way we invest and our strategies for investing.
I wonder, in that case, Jeffrey, thank you. And I just want to say to everybody watching, this is such a unique opportunity. We've got two different continents talking to each other about something so incredible coming together. If you've got questions, please do share them. I've got lots, but it's up to you guys to also get involved and get your questions through to this esteemed panel of experts. But I wonder, on that note, from what Jeffrey was saying, Professor Hyo Sang Yu, if I could bring you back in, because you touched upon this when it comes to Korea not having this a complete one understanding of ESG, and now we're talking, and Jeffrey's talking about across different continents and never a homogenized understanding of ESG. I wonder if you could just touch upon the points that do bring these two, I guess, culturally very different but economically fast growing and aspirational parts of the world together. What does bring them together, and so what can we aspire towards in the future?
So ESG in advanced countries, in Europe and in the United States, it has been a long time since it has been introduced. And so for Korea and Asian countries and Eastern European countries, it is taking some time for us to fully understand ESG. And the advanced countries, it is misunderstood in some areas that ESG is being used to colonize emerging countries, and that it is creating an unseen tariff barrier. And some are even considering ESG to be an oppressive concept. Therefore, we need to balance out the speed, and we should not use sticks but rather carrots as we try to create a consensus of ESG, and we need to create an environment that enables us consensus making. However, it seems that some advanced countries are speeding up ESG efforts, and I think some panelists did mention this, that countries around the world, including Korea, and in particular, because of COVID, the supply chain is being disrupted, and Korea is a country in which businesses are utilizing supply chain for their business, and Korea and developing countries need to be included in the supply chain. And if it's such ESG regulations are provided in a short term and we have to make changes in the short term, it might be perceived as a barrier. Therefore, we need some efforts for consensus building, and this needs to be a prerequisite.
Professor, thank you so much. Agnieszka, let's bring you back and talk about these trade barriers. How strong are they? Are they something that are tangible when you're looking at this situation? And also, I wonder if you could bring in this idea about labour flow as well, because that's something that is important for these particular nations. And yet, of course, with COVID, as Jeffrey has touched upon, with COVID, it's just been a huge impact on what we would normally expect to see.
Oh yes, big time. I will cover this, Kasia, but maybe I will refer back to our panelists about the taxonomy, about a different understanding, and it is an absolutely fascinating discussion, I must tell you. I want to refer a little bit to greenwashing and actually how much we need this common measures to be able to actually assess what we are dealing with. We've been there. It's almost like if we're talking about not having something that is broadly understandable the same, I think we will be still going in the circles. So if we want to really get carbon neutrality, if we're talking about the European Union becoming a neutral continent by 2050, if we're talking about China being the same by 2060, clearly something needs to happen. And I work for the consulting and also the audit company, and we always say that what is not measured and recorded is not done. So from this perspective, we do need to have some common denominators about what we really understand as green. I will refer maybe to have a segue to the trade right now. That recently we were looking at a fascinating EU report from January 2021 that said that 42% of companies claiming being green or products being green are exaggerated, misleading, or simply false. 42%. So my thinking is we can discuss about how much each country, each company, each individual can contribute, and that's why the Paris Agreement, as you all might remember, is focusing on the nationally determined contributions. So the countries themselves are saying how much they can contribute to the transition. So I'm a great advocate for having it as unified as possible, but of course I agree with our panelists that there is like a huge work to be done about the data analytics, about understanding, and also about some sort of a debate and the consensus that we need to reach. Now, coming back to the trade, let me again maybe refer to the EU. Recently, in January, our EU Commissioner for Trade, Dombrovskis, was talking about the new trade, new EU trade strategy, and the strategy was broadly about two things. One is really the post-pandemic recovery and how much it is needed, how much we need to trade to recover from. And the second thing was about Paris Agreement and the contributions there being an essential element of the new EU trade deals. This sends a signal, yes. So it shows that actually we will be taking it quite seriously, and we're talking right now about the rule-based trade. So if we want to have a trade with the European Union, it needs to be green, it needs to be digital, it needs to make sure that somehow it supports the EU strategy around it. So I think it will have quite a significant impact on how we are doing trade, how we are dealing with WTO, how the trade agreements are going to be shaped in the future. and also how is it going to be monitored. Now, I know that, from this ESG, I always have a tendency to covering this E part, and very rightfully, you, Kasia, asked about the S and G part, so especially about the workforce flows. Clearly, working with our clients, also seeing what is going on right now within PwC, we are talking about totally different work after the pandemic, and the workforce flows has been stopped quite significantly. This impacted a lot of businesses, but I would say in general, especially when we're talking right now about emerging Europe and Asian countries, I think we did relatively well. So as it comes to hybrid working, as it comes to remote working and so on. Clearly, the vaccination program and how quickly is it going to proceed in all the countries will have a huge impact on how quickly we are going to go back to the new normal. It is not a coincidence that the name of our panel is to build back better together. So maybe better together also means slightly revised working environments and working models. So I do hope that the post-pandemic situation will bring also lots of new opportunities for having a more innovative and modern way of working and cooperating.
Agnieszka, thank you. I was worried actually to hear about how there's a lack of that percentage that you said, that there's a lack of confidence in ESG, and it was quite staggering to hear that. But just let's bring Jin Yong Kim in on the point of building back better, because yes, as Agnieszka very rightly points out, that's the aim, the theme of the conference. So let's talk about how post, we say post, of course, we look at what's happening in India, for example, and it's the country very much gripped, and our hearts and prayers go out towards the people there. But we've been so gripped in this pandemic. Jin Yong Kim, how do we then come out of this and genuinely build back better and work together, and also build confidence so that people do believe in, and companies do believe in greener and a better and a more transparent way of doing business and building the economy?
So I think I did touch upon this earlier on in my earlier remarks, but ESG, I think the best way for us to approach it is a phased approach. So not all at once, but going in stages. Because of the pandemic, I think many people have come to the understanding that climate change is a very big risk, that we have to respond to it. But if we look at Africa, they take up, the entire continent only takes up 4% of the global carbon emissions. And if we were to apply the same standard, uniform standard to Africa, that we would impose in other countries or other regions, then Africa will not develop very much. So when we look at carbon emissions, we also have to look at development, and we shouldn't just blindly apply the standard of advanced markets like the European markets into all markets. So instead, we should try to take a phased approach. And in Korea, we have this word called MZ generation, the millennial generation. So people born in the early 1980s all the way to the 1990s. So these are young people who are in the 20s to late 30s or so. So they are typically called in Korea the MZ generation. If we look at their consumption patterns, we call them the green consumer. So these are people who are already very woke. They are conscious about green purchasing. So they don't just blindly buy whatever brand that they think is great. They are thinking consumers. So they look at fairness, human rights, eco-friendly, animal rights. So they are interested in all of these different areas when they go into consumption. So we have to be mindful of their consumption preferences. And they are this new target audience in the market. And this means that many corporations, many companies will see opportunity in this target market. In the post-COVID world, I think that this new target audience and with these new different emerging markets and countries that are developing as well, I think that these different players will get a new opportunity to develop further in the post-COVID era. And as for ourselves at KB Financial Holdings Company, our financial holdings group, we will also do our best to provide good funding to these players.
Thank you so much. Well, let's pick up with Jeffrey on some of this, because I love that idea, the MZ generation, that they're so woke and they understand what they're doing in terms of they look into stuff. They just don't go blindly, say perhaps our slightly Jeffrey older generation, let's be kind to ourselves, but this younger generation is more understanding of what it wants, and they're more demanding ultimately, as Jin Young Kim was suggesting, was implying. How do businesses in that case adapt to that to ensure that they're socially investing and adhering to that kind of drive that this MZ generation is taking us?
Well, I agree with Jin Young that I don't think one size fits all. And it goes back to your original, question about standards and how do you apply the standards. And I think there's always going to be gradation and heterogeneity on the standards. But ultimately, whether it's KB or it's Gazelle, we have to be not just reactive, but proactive about trends in the marketplace. And so, the future generation, the MZ generation, those are the future consumers that are driving consumption for the businesses that we're supporting, right? And there's no doubt, and I go back to my original point that ESG is can be built into a benefit to businesses if done right. I mean, if you look at governance, for example, you want good governance in your portfolio companies, whether KB is investing in a company or I, as a private equity fund, are investing in a company, because I get better performance from better governance. And I have better risk mitigation if they're not doing stupid things environmentally, because if there's a major oil spill or something like that, I mean, you saw in Russia with the major oil disaster, or it was actually a mining company. It's a major disaster, and you don't think of Russia being as innovative on ESG, but that company has major issues now with the government because of that. So risk mitigation, it makes complete sense. And so if you look at the end consumer, which is the word woke means many things now in America. It's kind of a crazy word, but a new generation that expects more from its companies and building a brand around proper ESG standards, whether it's environmental, social, or governance, you're going to sell more product, to that generation. I do think it's a complex issue when you start talking about countries like Africa versus the frontier markets that we're dealing with, and the trade-off decisions that are being made in terms of, are you going to generate energy from coal, gas, or renewable? And I don't think it's an easy answer. But I do think that if you are a consumer and you are getting per GDP growth that's occurring, and you're going up the chain of value, and you're starting to generate more wealth and wanting better things, you start being more aware of where those products come from and what those products represent, and becoming more conscious of it. So it depends on how far you want to get ahead of the curve. And there's going to be certain companies that are going to be ahead of the curve. They're going to serve those expecting youth. That's going to be the future market driving consumption, or you're going to be behind the curve. And I think those companies that are ahead of the curve, ultimately for the long term, will be rewarded. And then I think it becomes an issue of shareholders and stakeholders. Shareholders, with short-term perspective, driving quarterly returns versus those investors that can take a long-term perspective. And I think guys like Tesla and Elon Musk have proven that if you have that long-term perspective, you can absolutely change the market. I mean, electric cars was nothing, and now look where we are. And it was because someone had a long-term strategy, and it moved all the major players. I mean, how did one company move an entire market when all the major automotive players didn't move the market? And so I think you're going to see that, going back to your point about the NC generation, that those companies that are going to take that long-term risk are going to be the future unicorns, right? And those are the companies that are going to really generate value, long term.
Jeffrey, fascinating, some fascinating points. We need a couple of days to discuss all of this. There's so much to talk about, but let's get Professor Hyo Seung-Lee back in on this, because when Jeffrey's talking about governments also being involved and talking about risk mitigation, and the forward-thinking companies as well, are there any companies in your mind that you already see being those forward-thinking ones that are ahead of the curve, as Jeffrey was mentioning? And also, I wonder if you could just throw in from your kind of the academic point of view how important it is for governments to be on board with this. And when it comes to Southeast Asia, how are those governments doing? Are they on board?
So unfortunately, when it comes to that issue, at least if we look at the Korean context, I cannot think of any model cases right off the top of my head, because in Korea, the Korean industry, I think you know that we are heavily oriented towards chaebols, these conglomerates, and that's how we achieve these rapid industrialization and rapid economic growth. So in fact, governance is actually a challenge for many Korean groups, big Korean conglomerates. But as mentioned before, in the United States and Europe, when we talk about ESG, people think about the environment. In Korea, when we talk about ESG, many Korean market participants say that we should begin by fixing the governance issue, because we haven't fixed the governance issue yet. And then after we fix the governance issue, we can go towards a social issue and then move on towards the environment issue. That is what many of the market participants in Korea are saying, at least when it comes to ESG. But as you know, the governance issue is not something that we can resolve overnight. It's going to take some time. But I can say that in Korea, we've seen a very vibrant a very vibrant startup space. We're seeing a lot of unicorn companies. And these young, thriving companies have very good relationships with their customers and with their investors. So I do think that there is going to be change in the Korean market, definitely. But at least for now, the ESG market is still emerging. So as you said, the global companies all have different ideas and understandings about ESG. So the concept itself is still in its initial stages, and that's why people have different ideas and different understandings about ESG. So I hope that we can have more of these conferences and discussions so that we can have a consensus about what ESG really means for all of us. And based on that, we can take a step-by-step approach and a long-term approach towards the future. So to answer your question, unfortunately, I can't have any good examples now, but maybe next year or 2 years' time, I can tell you more.
Well, absolutely. Let's put a date in our diaries immediately and get another conference underway. Professor, thank you. So, Agnieszka, in terms of these future unicorn companies, especially with Poland, and the government there is quite interesting, because the country historically very coal-based, as that part of the world has had a history with that kind of industry. How is that part of the world now looking in terms of the way the governments work in supporting companies, or perhaps not, when it comes to ESG?
Well, for this, we definitely need another conference, but let me just maybe give you a little bit of overview of what is going on. Clearly, we are part of the European Union. Clearly, we are part of a European Green Deal, and clearly there is lots of tension. And it's not only for Poland, there's, similar situation in Romania and in a couple of other countries as well. Not to talk about, Russia or the stance. Yes, this is the situation that definitely needs to be taken into account. I would say it is not a coincidence that as part of the whole European Green Deal, you have something that is called just transition plans and just transition fund. It is quite obvious that the countries, the regions who have been coal dominated in the past will have challenges connected with the transition from coal. And that is why lots of conversation right now with various stakeholders within these regions. And I know it, for a fact, because we as PwC are working right now in 6 different countries, and if I remember correctly, 17 different regions, helping them to understand what it really means, and how to make sure that this transition from coal is as painless as possible, but also to some extent to create the opportunity. Because closing the mining, as scary as it feels right now, creates also the opportunity, especially with all the funding that comes behind the European Green Deal, and hopefully also from our local sources. And it will mean lots of opportunities around digital innovation, open data, and everything that comes within. So lots needs to be done by the governments and also by the different stakeholders around the upskilling, around really looking what will the new workforce needs will look like, and how we need to educate young people, but also how to effectively re-educate and upskill the workforce. I would you ask about the companies and the unicorns and how it looks like right now, and my thinking is that I working when I work and advising our clients on the regular basis, I really see the needle moving right now. And it's whenever we have an M&A transaction, someone is selling something, and there are potential buyers. We do talk about the ESG, and the professor was very right. It's not only about the E, it's also very much about S and so much about the G. So once we're having the conversations right now with a potential buyer, for example, there is evaluation, there is the whole due diligence process around the ESG. And trust me, if we have a potential seller, the seller who is not able to have a proper conversation with potential buyer about their ESG strategy going forward, it is a very big risk issue. So this is something that definitely is changing the way how we are looking at the company, how we evaluate them. And more I'm seeing this ESG part as a value creation opportunity, not only as a stake and the reporting requirement, but and I think it will continue this way.
Okay, Agnieszka, thank you so much. And I want to, seeing as Emerging Europe has created and brought us all together, I wonder, Jin Young Kim, if I could ask you and put the question to you, how much is Southeast Asia genuinely looking at the emerging Europe part of the world in terms of business and in terms of conversation and in terms of sharing ideas and hopefully sharing platforms and ideas for bringing a cohesive ESG understanding? Is this something that you're increasingly seeing when it comes to the companies that you're talking to?
As KB's global partner, we are entering mostly in Asia and Southeast Asia at the current stage. And for IB, we are in Europe and in the United States. And if you look at Korea, we have a export-oriented business structure, and that is because of this, we enter into markets such as Southeast Asia with low labor costs in Southeast Asia, and we manufacture there, export to other countries to gain profits. But after the pandemic, we are seeing reshoring becoming a major issue, and emerging Europe or Europe that has environmental friendly infrastructure, this might be an option in the future. And so there is increasing interest in emerging Europe because of their infrastructure and investing in companies that will invest in those areas. That is something that we will proactively consider. Emerging Europe and Asia, I believe, will have similar issues, and that is lack of transparent information. So for example, financial information, when we make investments, we see the business reports, so we can review that. But for non-financial information, we have no way of knowing unless that company discloses that information. I don't know the current situation of emerging Europe, but for non-financial information too, if we could see more of that information, and if such information is provided in a transparent way, I think this can encourage more investment in emerging Europe and also in Korea too. I think this is a very good opportunity, and for our company, out of ESG, a big concern is the gender equality. And I think this is a common factor of Asia because above team level, we only have 30% female employees. And when we receive assessment from global authorities and organizations, we get the lowest point for gender equality. So we need to increase female executives and manager level employees. And so we really have a far way to go in terms of improving our ESG. And the professor talked about governance issue is still in Korea, and for KB, we have good governance, but for us to become an even better company, we need to increase gender equality, and we need to increase female representation in the decision-making bodies.
That's absolutely fascinating, and I have to say it's wonderful
governance
to hear you talk about gender equality as well. It's something that was touched upon by President Biden in his first Congress address, and it's something that I'm very pleased to hear that you're picking up on as well, because you've got half of the population as a workforce, and so it's important that they get paid equally. We are running out of time, so before we, as Agnieszka said, we do need a whole another day of conference to talk about so many fascinating topics. But for the time being, I want to thank my esteemed panel of experts: Agnieszka Gajowska from PwC, Jeffrey Liebert from Gazelle Finance, Jin Young Kim from KB Financial Group, and Professor Hyo Sang-Ri, who very kindly started us off and kicked us off on this fascinating discussion about building back better together and applying ESG frameworks for international trade and investment. Thank you so much all. And Andrew and the team at Emerging Europe, thank you so much for facilitating this conference. And I hand back to you.
Thank you very much, Kasia. It was great to hear all of you in different parts of the world. Today, I was really interested in that part related to standardization, especially when it comes to cultural differences and the level of development. Now, last year, I had the pleasure of joining one of the sessions at the Key Platform Conference online, and we were expecting that this year we would be able to actually meet offline. Unfortunately, the situation is slightly different. The COVID-19 pandemic has exposed a lot of different challenges, has showed a lot of different challenges, and exposed the healthcare system's shortcomings and vulnerabilities in a number of different geographies. Maintaining and restoring health while minimizing negative impacts on the environment and leveraging opportunities to improve it is a clear post-COVID goal. In the next session, we're going to discuss the future of healthcare and how it can benefit from AI, from big data and other technologies, and how the Asian Tigers and Emerging Europe can join forces to contribute to the global healthcare and health tech scene. The next session will be moderated by Samuel Burke, a CNN technology correspondent and a news presenter. He will be joined by experts from EIT Health InnoStars, Taiwan AI Labs, Health Tech Lab Serbia, and the Hallam University Medical School. Sam, are you already with us? If yes, over to you.